Hi and welcome to Westpac London's end of day wrap for September the 8th. It's Thursday afternoon. Actually Thursday afternoon at about 20 past 4 in London. Actually today is not really about the moves on equity markets. Some of the European markets, for example, shifted between up and down on the session, 6, 7, 8 times. And as I speak, the moves on equity markets aren't particularly impressive. The Dow's been trading for a couple of hours. It's up 0.5%. It has been in negative territory today though. And European markets heading into the close have got the London market, the FTSE up 0.2%, French market up 0.5%, and the DAX in Germany is about unchanged. Those numbers will change heading into the close, and of course the US still has plenty of time still to trade. But what's really been important about today has been what we've learned about policy making and what we're going to learn about policy making in various countries. The European Central Bank, for example, dropped its tightening bias. We know that from the language used in the statement and also from comments made by ECB President Trichet in his press conference. The ECB said that they said they'll continue to monitor very closely all developments, but they dropped the reference to with respect to upside risks to price stability. And they spelled it out even more by saying that price development medium-term risks are now broadly balanced. And they also said that whereas previously risks to growth had been balanced, that risks to euro area growth are now assessed as being on the downside. And they published revised staff forecasts for economic growth and inflation. The growth numbers were revised down both for this year and for next year. Although I've got to say next year's number is still very much in the positive. The midpoint of their forecast range is still 1.3%, which is quite a bit stronger than our expectation that we'll actually see a contraction in Europe next year. The Bank of England left policy on hold, no statement, but we do know from previous minutes that, the people that have been voting on that committee for rate hikes have dropped that vote. There's a growing body of opinion in support of further quantitative easing. It's just that we didn't get it yet. We think that's going to be a story for next year. In the US, we've got Ben Bernanke speaking, that's the Fed chairman, speaking in Minnesota. That's at 6:30, London time, 1:30 New York time, which I think is about 1958 in Minneapolis. Sorry, joke there. I can say that, I'm from Tasmania. No, in all seriousness, it could be a venue or a means by which he will convey to the market just a little bit more information about what really is on the table at the September 2021 FOMC meeting. We've heard from a lot of the regional Fed presidents, some on the hawkish side, some on the much more dovish side. It does sound like we're going to get something on the 21st, but it might be useful to hear what Bernanke's got to say on that point. Other points to make just on the data front today: US trade deficit narrowed very sharply in July from 51 billion down to 44 billion. July's been a great month for US data in a sense. A lot of series that have been fairly soft showed a bit of blips higher. The trade deficit narrowed. Some of the housing numbers were a little bit less weak. We certainly saw retail sales pick up, industrial production and so on. As with those data series, we expect that this will be a fairly temporary improvement in the trade deficit in the US. There are some one-off factors relating to Japanese parts supply and the auto sector and electronics and so on that aren't going to be repeated. Lower oil prices and volumes also helped narrow that deficit. The market was disappointed by a slight rise, 2,000 rise in initial jobless claims, which is a measure of the extent to which workers are being laid off. There was no impact from Hurricane Irene. This was just a genuine sort of modest deterioration in that particular indicator of the labour market. So following on from last week's flat jobs growth report for August, we're getting now in early September signs that if anything there might be a bit of an increase in layoffs actually taking place. They're probably the main points to make. Oh, I forgot to mention German exports down 1.8% in July. Though industrial production was pretty strong, orders were very weak. So that's sort of three important numbers, two of which were disappointing for July in Germany. So on balance, the economic downturn certainly is starting to build some momentum in that part of the world. All right, I think that's about it for now. There's no particular events to look for in Australia during the trading session on Friday. We do get a whole bunch of Chinese economic data out though. Commodity prices, it's probably not worth really spending much time on them other than to say that gold's up 2%, 1,855. dollars an ounce, and copper is unchanged, and crude oil just up 0.5%. It's still just under $90 a barrel at the moment. The Aussie dollar is at 106.60 against the US dollar. It dipped below 106 briefly, bit of a V-shaped performance for the Aussie today, but it's pretty much back where it started our session. On that note, I'll leave it there. One thing to mention, New Zealand monetary policy statement coming up next week, but of course even before then we get the World Cup rugby. Totally unbiased, happy, good luck to all the teams that are participating in that. I actually wanted one of the team here to take me out with a rugby tackle at the end, but they're all pussies and they wouldn't do it. So that's the fairly corny end to the report for Thursday the 8th of September. Thank you.